Thanks for staying with us on Point now. Asian stocks struggled to shake off contagion fears on Tuesday, and selling pressure persisted amid concern that troubles at indebted developer China Evergrande could ripple across the world economy, markets and financial system. Currency, commodity and bond markets steadied, but overall demand for riskier assets remained low as the Federal Reserve is expected to step closer to tapering on Wednesday. So Hong Kong's Hang Seng hit a fresh 11-month low and was down 0.3% by mid-session, with early gains in banks and property stocks pairing a little. Japan's Nikkei returned from a market holiday with a drop of almost 2%. China is on holiday and mainland markets closed. To the United States now, Wall Street plunged on Monday as fear of that contagion from a potential collapse of China's Evergrande prompted a broad sell-off and sent investors fleeing equities for safety. The Dow Jones Industrial Average fell 1.79%, the S&P 500 lost 1.70%, and the Nasdaq Composite dropped 2.17%. Let's take a look at the rest of your indicators. Right, Martin Smith from Anchor Capital joins me now. Thanks so much for your time on SABC News this afternoon. Let's start with the rand. It was weakened yesterday against the US dollar. Why and what's it doing today?
So today we are about 1478 odd, and I think the points that you made at the beginning of the show were very well kind of presented. I think there's a lot of kind of risk-off sentiment and a bit of kind of fear creeping into the market, specifically around what is the Fed going to do later this week around tapering. Obviously, we saw the ECB a couple of weeks ago kind of push ahead with slowing down or starting with their tapering of their QE. So that's the one thing. But the main thing is kind of risk-off out of China. And we've seen kind of risk-off come through in the fact that we've had quite a lot of regulatory crackdown from the Chinese government, but now it's also this Evergrande story and the contagion effect there. So people are feeling a little bit nervous. We've had a little bit of a bounce back today, both in our currency and our market. And you can also see that US futures are also in the green. So one to kind of keep an eye out for. And I'm pretty sure you'll want to speak about Evergrande in a little bit more detail now.
So, Martin, before we get into that, let's take a look at oil prices rising earlier today as analysts pointed to signs of US supply tightness. What's the price of Brent crude oil doing now?
So Brent's picked its head up a little bit. We've seen hurricane out of the States cause a little bit of havoc. And I think the weather season is obviously a kind of temporary or transitory factor. So you've seen supply come under a bit of pressure. Two of Royal Dutch Shell's fields in the Gulf of Mexico have been affected, and they'll only open kind of beginning of next year. So you've seen a little bit of supply side issues. That's caused, obviously with supply and demand side dynamics, has caused the price to increase a little bit. I think the big question is, what does the Delta variant do? What does growth do globally? And how does that affect demand as opposed to the supply side kind of little blip we've seen in the last couple of days?
All right, let's go back to then the Chinese property market. What is happening there? Just give our viewers some context and also talk about how it's affecting other sectors of the economy there and across the world.
Yeah, absolutely. You used the word contagion earlier, and that's the best way to kind of describe it. So Evergrande is a real estate developer in China, but the key thing with them is they have $300 billion worth of liabilities that they need to pay back. Mm-hmm. And as it stands, they're struggling to kind of pay the interest payments on that, and we might have a default situation kind of come about. And if that happens, what we'll see is, in very layman's terms, is they might have to start selling down their assets to start paying back their finances. So if they do that, then there's massive supply that comes onto the market, prices get knocked down, they're trying to sell properties and things at kind of discounted values. That then impacts the whole property segment because other property developers, their value of their businesses also go down, and their loan to values and all of those things also come into place. So then they might have to start paying back debt quite quickly. And it's just this spiral of kind of negativity across the board, and that affects banks and affects and then it just depends on who does it fall on. So I think the key thing there is, will the government come and step in? And I think that's what people are waiting for. Are the government going to bail them out? Is it going to be a soft landing? Effectively, who is going to take the pain? Because money needs to be paid somewhere, and if it is let just to kind of play its course, I think it can affect not just the Chinese property sector, but the Chinese GDP, the Chinese market, and then obviously the rest of the world, right?
All right. So let's come a little bit closer to home and take a look at some company news. GPI has announced to shareholders that the Competition Tribunal has approved their transaction on the 17th of September, subject to some conditions. Tell us about that and what those conditions entail.
Sure. So I think just a little bit of history is they've been trying to sell the Burger King asset probably the better part of a year. The Competition Commission kind of put a little bit of a roadblock in that last year, and they finally seem to have got this over the line to offshore private equity firm. So that's a positive for them. I think just to touch on Grand Parade as an investment, it's not one that I'm particularly bullish on, and I think illiquidity in the stock is also something that kind of makes me sit very much on the sidelines. When it comes to actual underlying deal, the kind of conditions are, there's a couple, but the main ones are that the new entity has 5 years to spend up to $500 million, or at least $500 million rand in kind of capex. They also have to open up another 60 Burger King outlets across the country, which will take it to 150 across South Africa. And there's also a couple of other details around employment and employment benefits. So quite a few things there. I think they're trying to be pro kind of South Africa and pro GDP and looking after kind of the employees of Burger King. But I think finally over the line for GPL is a bit of a positive.
All right, and very briefly, as we wrap up, Rand Merchant Investment Holdings saying their revenue rose to around 20.57 billion from 17.35 billion posted in the previous year.
Yeah, so a very good number, obviously, that's come out. And I think the big thing, to kind of focus on with this business is the news that actually came out yesterday around them unbundling the MMI and the discovery positions out of RMI. So essentially what you're left with now inside RMI is OUTsurance, and that's OUTsurance South Africa, OUTsurance UK, and OUTsurance Australia, as well as Hastings, which is based in the UK. So in essence, it's now just pretty much just a short-term insurer. But if you look at the underlying businesses of RMI, you've got Hastings, which is operating incredibly well, as we've obviously seen with these results, as well as the OUTsurance business, which is also doing very well and trading at a bit of a discount. So I think good news story for RMI. Business operation, you're doing well, and they've obviously done this value unlock deal now. So yeah, all around very positive, both from a momentum and earnings perspective, as well as a corporate actions and value unlock story.
Martin Smith from Anchor Capital, thanks so much for your time on SABC News this afternoon. So it's time for a short break.